Charlie Munger watched his Berkshire Hathaway shares drop 50% in 2009. When a BBC interviewer asked if he was worried, Munger cut him off with one word: zero. That's not stubbornness. That's strategy. Today, I'm revealing Munger's exact playbook for winning in volatile markets, the framework that turned chaos into billions. Here's what Munger understood that most investors don't. Crazy markets aren't the exception. They're the norm. I think it's in the nature of long-term shareholding that the normal vicissitudes in markets means that the long-term holder has the quoted value of his stocks go down by, say, 50%. 50%. That's not a crash scenario. That's what Munger called normal. And if you can't handle that, his words, you're not fit to be a common shareholder, and you deserve the mediocre result you're going to get compared to the people who can be more philosophical about these market fluctuations. Harsh? Maybe. True? Absolutely. Because here's the reality. You can count on more booms and busts over your remaining lifetime. Munger told University of Michigan students in 2011. How big and with what cyclicality, I can't tell you. I can tell you the best way of coping, which is to just put your head down and behave creditably every day. So how do you actually win when markets go crazy? Munger's strategy has three components. Component number one, inverse the herd. Munger and Buffett lived by one principle: be fearful when others are greedy, and be greedy when others are fearful. That's not just a quote. It's a decision framework. When everyone's panicking and selling, you buy. When everyone's euphoric and buying, you get cautious. Look at the track record. 2008 crash. S&P 500 dropped 57%. Investors who bought during the panic saw their money triple over the next decade. 2020 COVID crash. Market plunged 34% in 33 days, then fully recovered in 6 months and hit new highs by 2021. Recent tariff volatility. S&P 500 nearly hit bear territory, then surged 9% in a single day. Every time, the same pattern. Panic creates bargains. Euphoria creates traps. Component number two, seize the Lollapalooza. Munger had a specific term for major market crashes: Lollapalooza opportunities. His advice: when you get a Lollapalooza, for God's sakes, don't hang by like a timid little rabbit. Don't hang back. Major drawdowns aren't disasters. They're wealth-building events. They're when decades of gains get compressed into months of opportunistic buying. But here's the catch. You can only seize these opportunities if you're still in the game. If you panic sold during the crash, you're not around to buy the recovery. Component number three, active patience. Munger called it sit on your ass investing. But that doesn't mean doing nothing. It means always evaluating your holdings. Always looking for opportunities. Never rushing to buy or sell. Acting with conviction only when the time is right. Munger stressed this wasn't passive. It was active patience, preparing constantly but acting rarely. Here's the bottom line. Winning in crazy markets isn't about predicting the chaos. It's about expecting it. Munger said it perfectly. If you can't handle your stocks dropping 50%, you don't deserve better than mediocre results. That's not motivational speaking. That's mathematics. The premium returns you want only come with volatility you have to stomach. Your action plan. Step 1. Accept that 50% drawdowns are normal, not catastrophic. Step 2. Inverse the crowd. Be greedy when others are fearful. Fearful when others are greedy. Step 3. Keep dry powder ready for Lollapalooza opportunities. Major crashes are when fortunes are made. Step 4. Practice active patience. Don't confuse sitting still with doing nothing. Always prepare, rarely act. The crazy market you're worried about? Munger would call it normal. The volatility you fear? He'd call it opportunity. Because here's what he knew. The market rewards those who can stay philosophical during chaos. It punishes those who panic when things get normal. Stop trying to avoid volatility. Start using it. That's how Charlie Munger turned market chaos into billions. And that's how you win in any market condition. Hit the subscription button and notification bell if you found this useful.